What is up, boys? Welcome back to the channel. Man, I look fucking homeless, but I'm excited to bring another banger for y'all. My whole goal is just to make these videos super digestible, because we know that all these content creators, they like to make 40-minute videos, 50-minute videos, just crazy long videos. And I know y'all got attention spans of fucking squirrels, so we got to make that shit, attention span digestible. You know what I'm saying? To get that dopamine hit. Anyways, today's video, we're going to be talking about candle range theory, okay? It's a very powerful tool just by understanding how candles work, and I'm going to be explaining to you exactly how you can utilize this to get really high probability trades, swing them on your personal accounts, into the next day, and just really get good trades in, all right? So this is essentially what it looks like. What is candle range theory, okay? Candle range theory, all right, especially advanced candle range theory, we're going to cover basic and advanced as well. But it's literally so simple, guys. And again, I like to do this in my own way of actually explaining it to you that makes sense and that's practical. But it's literally every single candle has a top and bottom wick, okay? So when we have a candle, right, guys, we know that if we're looking at a candlestick, right, we know that when a candle opens up, right, a candle, the way price is, expressed is it opens up, assuming it's a green candle, at a certain level. It'll make a top wick. And actually, let's go to the 1 minute to make this diagram way easier, okay? So, for example, assuming we have a bullish candle, if price is going higher, right, how do we express that with a candlestick, right? The number one important thing in day trading, right? Okay, how does a candlestick work, okay? So when a candlestick opens up at a price level, right, and wants to be bullish, it'll open up, make a top wick, right, or a bottom wick, and then end at some level. Okay. Now remember, there's an infinite way to just express a candle, but if we were able to draw this out, right, and mark out these points, and I know this is really bad drawing. I'm gonna actually get a drawing tool at some point. Let's actually use. I have a better idea. Let's use this. Let's use the drawing tool. I think it's gonna be way easier for me to show you guys how this works. Oh, perfect. Okay. So again, we open up right here, make a top wick, bottom wick, open, and then we end up like over here, right? If we were to draw this out in terms of the data itself, right? And actually, I'm doing this so fast. Like, let's say we do it like this. All right. Actually, this is bad too. I know this is, bear with me, guys. Sorry, I'm trying to visualize this good for y'all. Okay, perfect. So if I were to now mark out these points of this being our top wick, okay, and this being our bottom wick, and then this being our opening price level, we're just gonna label that. Well, we're gonna label that OP, and then we're gonna label this our closing price level, right here, CP. Right, this candle will look like this. It'll open up, it'll make a top wick like this. All right, bottom wick like this somewhere. All right, and then it'll close at some price right here. Okay, so our opening price is going to be right here, right? Our closing price is going to be right here, right? And our top and bottom wicks are going to be here and here. Okay, this is just the theory of how a candle works. I know this is super messy, guys. Thank you for bearing with me. We're going to delete all this actually right now. Just delete all this. Boop. Nope, you can't do it like that. We're just delete all this. Anyways, the reason why I just want to kind of give you a visual example is kind of make you think about this. But I made a very formal, exact, precise way to express this right here. So we want to be able to use this, especially on the higher time frame, because we know the higher time frame controls the overall narrative, right? You're going to see a lot of people use like a 4-hour candle range theory. We can definitely cover that. But really, you want to be focusing this on like the daily, maybe the weekly, but really the daily is kind of like the sweet spot, right? But essentially, it's the idea that, okay, if this is a bullish candle, right, it makes the opening price level, right, bottom wick, top wick, closing price level. The next candle is going to be a bearish candle, right? Assuming we want to catch the expansion move down, we're going to open up at the opening price of this candle, the previous candle, the daily candle, make some type of bottom wick, top wick, and then close, right, at some price level. And then the next candle, because we've made a hammer candle, a hammer doji, and we've kind of basically, done some type of external change of character, we're going to have that top wick and expand downwards, okay? So literally, it's so simple, guys. If we were to map this out on the lower time frame, mapping the higher time frame to the lower time frame, This is exactly what it's going to look like. Okay, so you're going to see prices going to do something like this. It's going to end like this, and you can align all these points up. I made it color coded specifically, but you can see bottom wick here. This is going to be our our opening price level, right? And then this is going to be our closing price level. Our top wick does something like this, right? And then this next candle, right? It opens up right here, and then it'll make that top wick, bottom wick, close, whatever. Okay, the main thing y'all need to understand is when it does something like this, right? This is going to be an external change of character. You got to understand, you have to really have a strong understanding of swing points and swing pivot structure / swing structure, because we know that these levels are going to be very, very important swing structure points, right? Over here. And obviously, I've taught this to you multiple times. If you're in the mentorship, if you're maybe not in the mentorship, maybe you've learned this before, but this is called an external change of character when price closes strongly below a previous swing leg, right? Very simple. And what this signifies is that price wanted to, negate all these orders and close bearishly below here. So now, very simply, if this is aligning up in terms of time based on our next candle daily open, right? What's going to happen is we're going to expect that top wick to form somewhere around here, and then that expansionary move down to form right after that, because we've kind of showed that, okay, we're changing our order flow on the higher time frame because of this external change of character. Now, it's not obviously going to be perfect, right? But you're going to notice that the way I've studied these markets a very long time, guys. I know how they operate, okay? And what you're going to realize is that basically when it makes this top wick and you're going to try to catch the expansionary move down, right? It's going to react off some key level. Now, a key level, it's going to be a supply demand level, right? Actually, let me mark it out like this. A supply demand level. It's going to be a volume based level, right? Volume, so it could be VWAP, right? It could be your footprints, your FP. It could be your your volume profile, right? VP. I'm going to say it like that. Okay? It can react off an imbalance, right? Imbalance, or it can react off a high time frame extreme wick. Okay? These are all, ICT's gonna call these PDRAs. They're just key levels. This is why I label these key levels. Now, it's your job to figure out how to identify these. I'm not going to explain these in this video, right? I slightly will once you look at the real life chart example, but we know that these key levels, okay, are all going to react, or all these key levels are, or all these concepts are under these key levels, okay? Very simple. Now we're going to, again, delete all of this. Let's go right here. I feel like it's way better just to do like something like this and then delete. Oh yeah, that's nice. We can just do like this, boom, and then boom, deletes. That's cool. That's chill. Awesome stuff. Awesome sauce. Anyways, so one more thing you got to be aware of is, it's easy to show this in hindsight, right? But you have to have a really, really strong idea of execution. You have to be really, really fluent in being confident in yourself to understand this market structure in real time. Because if you can't have the confidence to identify these in real time, you're not going to be able to execute on them, and you're going to just, lock up, be hesitant, and you're just going to cry because you missed the trade or you just don't know what to do, okay? Now, the reason why we have these, you can either catch the key level, or you can wait for some type of more confirmation, like right here or right here, and you can just simply answer off a retest off a key level, right? Off here or off here, and then just ride the move down, right? Very simple stuff. And that's really it, describing candle range theory in a whole. Now, we're going to look at the charts to kind of show you exactly how this would work, right? And how you can take advantage of this. Now, a great example that we actually had was on gold, okay? Great example on gold. So if we come over to the daily time frame, again, and a big thing is also patience, okay? Now, this is early April, right? Early April. And you're going to notice something, right? You're going to notice something very interesting. We have a bullish candle, right? We have a very, very, very big bullish candle. Okay, so what happens is what are we expecting now? Okay, we're expecting price to trade above the high of this bullish candle, right? Make a top wick somewhere above here, and then show its hand that it's now expanding downwards, right? And then we're going to play the retrace into another expansionary move down, because this is showing a very, very strong shift in order flow. Because, I mean, if you guys trade doji candles, or like what doji confirmation is, it's just a simple doji confirmation. And showing that order flow is switching bearish on the higher time frame. So in real time, when you see something like this, right? When you see something like this, and again, it's not going to be perfect because you can argue that we have the same pattern happen right over here, the same type of market structure. But you got to be really patient because, again, you have to wait for price to trade above this previous daily high, okay? And then you got to wait for that higher time frame to actually show its hand. So let's actually, go down to the lower time frame now to really, really dig in this visualization for y'all, man. All right? So if you go over here, right, we're going to go over to the 30-minute. Great. Okay? Great stuff. Great stuff. Okay. Actually, not great stuff. We're going to open up our indicator for Asian session. And remember, guys, this is a framework, right? You can mold this based on your understanding of key levels, based on your understanding of higher time frame order flow, based on a bunch of other stuff. We're going to cover two different things. We're going to cover our main example that I just showed you, and then the next one, okay? But essentially, very simple stuff, guys. Very, very simple stuff. We know that this is going to be, right, the previous daily low, previous daily high of that green candle. We're expecting price to make that top wick, right, top wick, then expand downwards and show us that it wants to, close bearishly. And again, this is going to be called our external change of character. Now, if you want to use the extreme swing low, you can. It's all up to you. But I like to see if there's significant volume coming through, and I'm confident in the structure itself, and based on like where price is ending on the day, right? I can confidently say that, like, for example, like if you go to the daily, and again, this is why you need to always look at multiple time frames, because you can see like the candles. There's a gap, right? There's like a gap right here. In reality, like this gap isn't there. Like think about just moving this candle up like right here. So in reality, this candle is exactly what I'm showing you guys. This is like the perfect candle range theory, format that I've been explaining to you this whole video. But it's just that weird gap happened, specifically that gap down. So I don't want you to think of this too crazy, right? So if we come over here, right? In reality, price is ending like down here. Okay, in reality, price is really ending down here. Okay, now if we go to a medium time frame, you don't want to go to a too lower time frame, but like medium time frame, like 5, 15, 30, above the 5. Okay, you're gonna notice something that what happens is when we kind of close with this bearish leg. Oh my God, excuse me, with this bearish leg right here. And at this point, it's already 1 o'clock. There's a very strong probability that price is going to end in this density of like this little region, right? This little region. So we know now that essentially what we've done is we haven't really closed below this previous daily lower. We haven't closed below here, right? But we closed below all this relative structure. Now this is going to be kind of like an internal change of character in a sense based off this time frame. But we kind of closed below all this structure, right? And very simply, guys, all you do is you answer in on that confirmation, right? This could be a key level, right? And if you notice specifically, when I say a key level, it's not a coincidence that we react off this demand level, right? It's not a coincidence that these wicks, these extreme wicks, act as a retest of supply, to go lower. So then obviously this is our same model that I just showed you right here of we're reacting off a key level and we're seeing that expansionary move down. So you can have a very big confidence that, you can have a tight stop on this and then just hold this to a potential swing low, like here, and then really get some good RR. Now, this is assuming, based on this, right? This is assuming that like you're closing below the kind of like a midpoint of this candle, which is fine. Like if you want to wait for like a bigger closure below an actual swing low, you could, like right here, and I would consider this enough of a closure, honestly. But again, it would be the same exact principle, guys. Same exact principle, right? In this case, if you based off this structure, you would have hit 11 RR. Great stuff, amazing stuff. Targeting, this swing low, okay, 10 RR, right? Now, if you're waiting for that exact model to play out right here, very simple stuff, guys. What do we see happen? We literally see a retrace off this structure, right? Off this overall structure, making a retracement leg, a corrective leg, reacting off some key level, and then obviously expanding downwards. Now, it's not going to be perfect, right? You're going to have obviously some, the market structure in the lower time frame will have some, non-optimal, because we're assuming optimal market conditions, right? But on the lower time frame, what's going to happen is you're going to have some complex movements where it might consolidate, it might make another high, then show its hand, whatever, right? But obviously you can re-enter, you can manage risk, you can use your understanding, your experience once you get enough to, again, see how this works. So very simple stuff, right? You could then obviously maybe see like a multiple breaker structure, getting right here, re-enter in, and then obviously you're targeting, like these swing lows right here, boom. And then like obviously that, over 3-4 days, like a 1 to 8, right? So all we're doing is we're just playing the fact that like these candles are just showing their hand. They're showing the fact that, okay, based on the higher time frame candle structure and order flow, we're just basically just simply playing the order flow, right? We're just playing the retrace, we're playing the order flow, we're playing how the market is supposed to work, right? It's very simple stuff, actually. Now, another thing, actually, I can make this for another video, but yeah, I hope this helped. Honestly, I don't want to make this too complicated, but if we could summarize it again, you want to wait for that topic to be made, wait for that external change of character, wait for a retrace of that structure either here or here to a key level. Then you want to execute off what I told you, looking, your volume-based levels, your supplier demand, etc., and just write it down to the next swing low. Or maybe you want to use a scalping model off this 1-to-1, 1-to-2. It's all up to you. But in terms of really matching yourself with the higher time frame order flow and the highest probability of market structure, this is how you got to do it, guys. All right. But anyways, I hope this made sense. I do want to make a video targeting maybe specifically the 4-hour and how you can kind of scalp the 4-hour candle. Yeah, it'll be some good stuff. All right. But with that, boys, I'll see y'all later. Thank you for tuning in. And again, if you guys want a full in-depth, program of where I literally teach you this, like literally 1-to-1, and you're never going to have to, buy a course or any other program or go on YouTube after this. Obviously, I cover all of this, specifically this video, in where is this right here? It's in Candlestick Dynamics over here. Nope, not here. Right here. Advanced Candlestick Dynamics right here, right? This is where I cover all these, these models and how you could really understand this from a high level, right? And yeah, we'll work one-on-one. You guys know you get lifetime access to my Discord. You guys get access to all the live recorded content, all of this, one-on-one calls with me, and obviously my trade journal and my backtesting sheet, obviously my mentorship. So yeah, I mean, if you're a beginner, you have really no idea what to do, this is going to be for you. But yeah, drop a comment. Really would appreciate the like and sub, guys. I'm really trying to bring out banger content for y'all. And yeah, join my free Discord as well if you want. Would appreciate that. And with that, I will see y'all in the next video. All right, peace out.